Hello everyone, and welcome to another episode of The Pragmatic Investor. My guest today is MyWeeklyStock, a fellow Substack author and technical analyst. I've been following MyWeeklyStock for some time on Substack, and I'm pretty impressed with the kind of content he puts out. He definitely has a great command of technical analysis, so I thought it would be a great chance today to bring him on the show and tell us about what his system is, how he thinks about trading and investing in stocks, his general outlook for the market, and even his thoughts on crypto and Bitcoin. I really enjoyed this conversation. I thought it had a really good flow. We really got into some details of technical analysis, so if you're into that, I think you'll definitely enjoy this conversation. If you haven't already, go ahead and follow MyWeeklyStock on Substack. The link will be on the description. And of course, if you're not already subscribed to The Pragmatic Investor, go ahead and follow me on Spotify, Substack, or YouTube, wherever you're watching. I do plenty more stuff on Substack and other videos on YouTube. And as always, I hope you enjoyed this conversation as much as I did. All right, welcome to the show, MyWeeklyStock. Thank you for coming on.
Thank you for having me. I'm very happy to be here and have this conversation together.
Awesome. Well, to get started, first of all, for anyone who isn't familiar with your work, tell us a little bit about how you got started on Substack and what you've been kind of doing over the last few years on Substack.
Yeah, sure. So I actually started my Substack, so MyWeeklyStock, back in January 2022. So it's right 2 years. I learned about Substack because I was subscribed to a couple of one, especially in Bitcoin. You had like some famous Bitcoin analysts that had the Substack at the time. So and so as I was working into like my kind of strategy that I'm sure we'll talk a little bit later about that. I kind of thought I will use Substack and just start writing and send the emails on there directly. And so funny enough is I started Substack and before anything else, so I didn't have Twitter page or Instagram page or any social media presence. So I started directly on Substack. Just writing. So the original idea was like sending one stock pick recommendation per week. And that's how it started. So I created my strategy and I just started sending those emails at the beginning to 5 people. But you just have to start somewhere, right?
Yeah, absolutely. It's obviously the hardest part is that that beginning where you kind of just write it into the void almost. But it's obviously very satisfying once you build up a bit of an audience, which what you have. Now you mentioned, of course, you basically you started off by sending out a weekly stock pick using your strategy. Tell us a bit more about your strategy. I know that you kind of use momentum, maybe could say different forms of technical analysis. What is your kind of strategy when it comes to stock picking?
Yeah, exactly. Yeah. So, I would say like my strategy is very about like momentum, as you said. So it's really trying to capture powerful trend, both on the short term and long term. I would say it leans a lot on technical analysis, but the word I prefer is more like quantitative. So in the sense of I'm trying to basically remove like psychological bias and use like hard data to kind of take trading decisions. So for example, on my main strategy, the one that I started where I send one stock per week to buy based on momentum. So it's really, I'm basically looking at different performance indicator, like how was the stock performance in the past months, in the past 3 months, how far are we versus the 1 year high, basically, and some other like, the performance data. And based on that, I've built like my own kind of algorithm, but it's just basically for a way to rank stocks within a specific sub-universe. So in my case, I trade mostly the Dow Jones stocks, so it's like 30 stocks. And I basically use all those indicators to rank the stocks among the 30. And basically the best one, that's the one I trade during the week. So you see, it's more like, as I said, it's more like quantitative approach. And so that's the main, let's say, strategy I started. Now I've been expanding since then in different way, but still always on the momentum. So it's just about finding stocks that are doing very well recently with the idea of that they will continue doing well in the future. So that's the simple way of seeing momentum in a simple word, let's say.
Mm-hmm. So getting into it a little bit more, when we talk about momentum, what kind of indicators would you say you use more frequently to kind of let you know where that momentum is going?
Yeah. So for me, like the moving average has been the main one I've been using, especially to assess the trend as we're talking, to see like, is the momentum going away? Moving averages are the one that are
Any particular what time frames for the moving averages?
So it depends. So from let's say for trading, I'm usually using the 4-hour chart or the daily chart. I'm not a day trader, I mean, because it's I have a full-time job also on the side, and I don't want to spend my time glued on a screen to check the prices. So I'm usually more like into swing trade, so I will take a position for a couple of weeks to a month and get out. And usually, so I use the 4-hour or the daily time frame. And in terms of specific moving average, I use exponential moving average, and usually the 9 and 21. Now, honestly, for me, this is like my advice to people on this is you need to study and see what works for you. I don't think the 9 and 21 is specifically the best in the world or have some magic behind it. That's the one that for me I found that works for me. But I think you need to see what fits for you, with your style, with your time frame, and so on. But that's mostly what I use. Funny enough, recently I've been also using this for long-term investing actually, and that works quite well. And so I use actually the weekly chart to do that. And I realized also over time that the more longer time frame you use, the better I feel about it actually, because the trends are cleaner. It's less work, to get in and out position and so on. So I'm more and more extending my let's say horizon on this.
Mm-hmm. Yeah, absolutely. And I think, like you say, it makes a lot of sense. You have to kind of find what works for you. There's a lot of different things that can work. The important thing is, of course, kind of sticking to an actual process, which, a lot of people, I think, they're just kind of grabbing onto something that can work. It works for a little bit, then they stop, it doesn't work. So that's definitely one of the challenges.
Exactly. I mean, I think last year I tried to make a couple of posts on Instagram about that. Like, people spend a lot of time talking about strategy. Like, everybody wants to find the perfect golden strategy that's gonna make them rich overnight. I mean, and for me, like, I'm trying to explain to people that this doesn't exist. I mean, and like what I use is maybe not the best strategy, but what's important is what you build around that, which is what are your system, how you're gonna execute, do you have the discipline to make it work? And like, honestly, this is why, like, back to my point on the exponential moving average, is it the 9 or the 10 or the 15? Like, honestly, almost it doesn't matter. I mean, study, like, me, what I've done is I studied, I backtest, I looked at how the strategy is working in the past. I looked at different type of stocks or tickers, ETF, and see which one respond best to that strategy. And then based on that, I build a system, and we can go into more detail on this later on. But for me, this is the part that is more important. Is okay, once you have one strategy is fine, but then it's like, how are you gonna make it work on a day in, day out? How are you gonna size your position? What type of risk management you're gonna put in place? Are you gonna be able to to respect that, and so on? And this is the hardest part in trading, right? I mean, ultimately, I mean,
discipline and emotional control, perhaps.
Exactly. And if we use a simple example, I mean, like the easiest strategy in the world is a simple buy and hold of the S&P 500, let's say. So you just buy the index every month and you hold it forever. Okay, this is a simple strategy that has proven record. But now you look in reality, many people are not even able to execute that strategy because you get all the negative news. The stocks are all-time high. the Fed is not going to cut the rate, just to take the example of this week. And, and I have friends over that like they are investing for 40 years with a 40 years horizon and they don't want to touch. And now they are starting to think, I should sell all my index because of the environment and the reality. This is the reality. So the strategy is one thing, but if even the simplest strategy, you're not able to execute it because of ultimately the two basic feelings that drives the market, which are fear and greed.
Mm-hmm.
That's for me the biggest issue, and this is what we need to work on as trader and investor, honestly.
Mm-hmm. Yeah, absolutely. That's very true. Now, I wanted to talk a little bit about technical analysis. We kind of touched a little bit on it as well, kind of how it relates a little bit to the fundamental side. But for example, we've now obviously got into earnings season. Just today, of course, or yesterday, we had Meta Platforms announce those earnings. I know that that's actually one of the positions I've read that you've held at some point and has performed quite well for. How do you think about technical analysis, definitely in terms of momentum and earnings? Because of course, earnings is something that can kind of, especially in the latest years, we've seen like earnings really kind of either really pump a stock or dump a stock. It really has a big effect. I mean, going for this earnings, is there anything you've done differently, or what goes into your head?
Yeah, so it's earnings are very tough, especially for swing trading and momentum, because as you said, when you have like double-digit move on a stock overnight, that can really change the momentum profile of of some of your holdings. So for me, like on my let's say trading side, as I said, so I use mostly the moving average. So like usually what I try to do on the earnings is two things. Like, so if I ever had the cases with Netflix, for example, in January, if I had like already a very good run on the stock, I usually like to take a bit off the table. This is what I've done with Netflix.
Mm-hmm.
Okay, after that it blew. They had like an amazing quarter and the stock shoot up, but at least I felt comfortable going into in the earnings. And now I'm just letting it run until my signal, let's say my trading signal I've built based on the moving average, tells me that the momentum is going out. So that's one proactive thing that I can sometimes do before earning. Now the reality is, and that's what I was telling this week to my subscribers about the 5 large tech stock that reported earnings. Earnings are unpredictable, and for me, like, so I started this week owning all 5 of them basically. So Apple, Amazon, Meta, Microsoft, and Google. I didn't take any preventive action going into this week because I couldn't know which one will overperform, honestly. And if people are telling you they know, I think they are not really serious, honestly. I mean, it's very hard to predict that. So for me, for example, on those 5, I didn't take any action. I knew that at least one will be selling off hardly. It was Google at the end, but I also knew that some will be going up. So for me, then on that part, it's more about risk management. So for example, on my portfolio, I usually don't put more than 5% of my account in any stock. So in a sense, even if Google is selling off 10%, after earnings, for example, I'm not risking a lot of my portfolio, right?
Sure.
So that's the kind of, if I summarize, is like ensuring that I'm, from a position standpoint, I'm never putting too much in one stock. Mm-hmm. And then if I had already a good run, I mean, I'm also sometimes taking off the table some of my my money, let's say.
Yeah, of course.
That's the so that's for before earnings. So then after earnings, it really depends. So again, I'm trying to be quantitative, data based on my trading decisions. So if after a couple of days the sell off continue, for example, in one stock, then I will usually get a signal that the momentum is getting over, and I will exit.
Mm-hmm.
And I would exit the position basically.
Mm-hmm. Yeah, like you say, earnings can be very unpredictable, especially in terms of the short-term moves that they can cause. Now, I'm curious that I wanted to get into a little bit
Yeah.
more how you kind of manage basically like short-term positions and then kind of have long-term positions as well. Now,
Yeah.
like, first of all, are they all like, do you use the same system, let's say, for both, or like would any fundamental analysis go into the long-term positions
Yeah.
maybe?
Yeah. So I have two. If we talk stocks, I have two portfolio. Indeed, I have one more short-term trading, and the other one that is more long-term. So the short-term is, I'm using like a fixed list of, let's say 20 big stocks, and they are pretty technical in the sense of I have my momentum, my like kind of moving average signal is like a crossover basically. On the daily chart, and I get in, get out based on that. And as I explained before, if sometime I might take profit before if I'm feeling that I have too much on the table, or if a big earning report is coming and I'm not feeling super comfortable. So that on the trading part, it's pretty technical. On the long term, so I would use again moving average, but on the weekly chart. So it's like, let's say, longer time frame. And then from your question on the fundamental data, for me, it's about, it's more first step, the fundamental data in the long-term investing. So I would, I would not feel comfortable based on my, my preferences, obviously. But I found it hard to invest in a company just purely on fundamental data, because for me, the risk on that is you end up overpaying, So what I do though is I use the fundamental data really early on in my process to build my watch list. Okay. So I would use that more as a screener.
Okay.
And we can go into the detail of what I use. I'm comfortable to discuss that. But basically, I have different like kind of financial criteria that I use to filter stock, and then based on that, I build like a watch list of 30 to 50 stocks. And then step two, I would use technical data to decide when I enter and when I exit on those stocks. And then I would, update that watch list on every 3 months or every 6 months. As stocks report earnings, you have new sets of data, new potentially stocks that meet my criteria, some that don't meet them anymore. So and then I continue like that.
And long-term positions for you would be anywhere from 1, 2, 3 years.
So it can be years, yes, but as long as I'm still doing it from a momentum lens, is like as long as the momentum is supporting, I would stay in a stock. But I'm also very comfortable in exiting a stock after a couple of months if it's if the price action is not what it needs to be, and I think that's a big for me, is a big point on if you want to succeed in that industry. I don't think you can be stubborn. Honestly, you need to be quite flexible, and it's true on investing. Is even more true on trading. I'm very comfortable exiting a stock now, and for example, re-enter in 2 weeks from now if condition has changed, and I'm fine. I'm not taking it as I'm wrong. I'm just taking as information has changed, and I go back into it. So then the long-term investing, obviously the time frame is way longer. And actually the longer, the more successful you are usually in those positions, because it means that your thesis is working and the price action works. But again, if something changes, I will cut it and I will not hold on to it, because ultimately my entry and exit are all technical based. So
right, exactly. I wanted to talk a little bit more about, you mentioned exiting the stock.
Yeah.
Times. Probably one of the big challenges. I think a lot of people often think about entering a stock and then maybe don't have such a plan with exit. What exactly are you looking at when you're exiting? Some kind of a indicator in particular, like a crossover, divergence? What exactly is it that kind of makes you pull the trigger?
It's a very good question actually, and it's the same for the entry, but in my case, I look at crossovers, so usually. So I'm basically, as I said before, I'm using two. I would typically use 2 moving average on a given time frame if we make it simple, and so one shorter average and one longer. So for example, 9 and 21, as I was saying before. And so when the 9 cross over the 21, I I would buy, and then when the 9 crossed below the 21, I would sell. So that's on the, let's say, the paper, how the strategy work. On top of that, I'm also looking overall at the chart. So, for example, is there any big price level that I think could be huge resistance? So if we look now, for example, at the S&P 500, like regardless of what my signal might tell me, I think that the level 5,000 will be quite a big resistance.
Mm-hmm.
So that could be one that trigger me to, like, maybe I will exit partially, some of my holdings on there once we reach that. If I see a bit of slowing down, if I see that we struggle to pass that resistance. So, but the main one is really the crossover for in my case. So that's on the, let's say, swing trade and long-term investing. On the momentum pick, so the one that I started with, not to make it too complicated, but so on that one is like one stock per week. So, and this one I built very simple selling rules actually. So I buy on Monday and I sell by the Friday. Or if my stop loss and profit target has been hit. So as simple as that. My advice on this, because selling is really the most difficult part in my opinion in this job actually. And again, we spend a lot of time talking about what to buy, and you see everybody making recommendation about this should buy, this should buy that. But actually, the profit I made when you sell, and this is really the hardest part. And again, for me, it links back to those two basic emotion that drives everything, which is fear and greed, and that's what will make you, lose money or not make as much as you could, and so on. So for me, is what I try to do is build a system around that prevents me to fall under those two emotions. So being the crossover of moving average, or simple rule like I buy Monday, I sell Friday, or stop loss and profit target, whatever it is, you see, this is just more to have some rule established, so that I don't leave that decision just to my feeling of the moment or the day. You know what I mean?
Yeah, absolutely. So, then I'll come to where you are talking about a particular stock, but for example, Meta then, up 15% post earnings. Is that time to take some profit on that one, for example?
I will not. On the trading part, I will not. I own it just on my trading portfolio, but I will not. Because, like, honestly, the momentum right now is quite good. I mean, so I don't see any reason to take profits on that one, and I will just let it run until it until it reverses partially, let's say. But this is it's a more short-term investment for me, Typically what I do for in the newsletter is that for each of those 20 stocks that I cover for the trading, I look at how healthy is the trend of each of those stocks, and while I don't take decisions directly based on that, it helps me to understand, okay, should I worry about it? Should I watch it a little bit more closely, or I just let it go? And for me, like the Meta, Nvidia, or Amazon, all those ones, I mean, for me, they fall in the part of like I'm just happy to run the trend while it lasts. And when I start seeing the first sign of slowing down, I will maybe take off some from the table, honestly.
Yeah, that also makes a lot of sense. Now, now you've also talked about basically having like a system, an algorithm. Is that something that like you literally have in place? Like you have a software where you're like basically executing this algorithm kind of automatically to an extent that's giving you the signals?
So it's it's not at yet that level. It's a semi-manual, so it's a more like a model, that basically collect different data and then have different weight against those criteria, and based on that create a score, let's say. So if you look of my weekly trading article, so I share actually that algo score because based on the number of the score, it's it has like more chance or more likelihood to be a good week, let's say.
Right.
But it's mostly manual at this stage. So I've been in discussion with some company to try to automate, but it was a little bit difficult because it's it's like quantitative data as I was explaining originally. So it was a little bit difficult. So I kind of park that for now. What I've been doing recently is actually using that algorithm on a daily basis instead of weekly. The results are not bad actually. But for me to go that route, indeed, I would be like looking into automate and why not having also like a trading bot executing based on that algo. So that would be more a long-term development. This one.
So in terms of actually trading, what kind of software do you usually use, or what kind of tools are you using on a regular basis?
Yeah. So I mean, Trend Spider I'm using a lot for mostly back testing. So like all that we discussed before about like choosing what's the right indicator or moving average to use at what time frame. So I did that all on Trend Spider, and it's quite it's quite awesome honestly. And then I use it on a daily basis as well to as I'm managing that short-term portfolio and long-term portfolio. So I have my watch list built in there, and I can check which stock I have to buy or which stock I have to sell basically. So that's one. I use a lot TradingView as well for the charts mostly. I like how the chart looks on TradingView, and checking, as I said, when I have to assess a bit how healthy is the momentum trade on a given stock. I usually use TradingView. And then the last one is Finviz. This is more for data and screening, basically. So, as we talked on, for example, long-term investing, building my screening tool for, to build my watch list, I would typically use data from Finviz. I also use Finviz a lot for my weekly market recap that I sent every Friday after the close to analyze what happened in the week. So most of the data also come from there actually.
Yeah, absolutely. I also use TradingView, and Finviz is also a great source of information. I haven't quite got into TrendSpider, but I'm definitely going to check it out after talking to you and or to Gary last week. So in terms of actually executing your trades, is it pretty much straight up stock buying? Do you ever use options or something like that?
So from what I write, let's say from the newsletter, is stocks and ETF, and a bit of crypto. From my personal, I trade a lot of options. I just don't feel comfortable sharing it, with the public, honestly, because options are very complicated, and if you don't do it well, you can lose quite a lot, right? Most of my recommendation, I actually end up trading them with option myself.
Okay.
But yeah.
Interesting. So, and then would your strategy ever involve shorting?
So interesting one, because I got actually a subscriber who asked me about that just this week. I do not, honestly. I found from my personal experience that it's hard to be successful shorting, because typically short are when the market turns bearish, is quite it's quite fast, the loss are going down quite fast, and the reversal are quite sharp also. If you think about what happened in October this year, that, for example, basically from one day to another, the market completely shift from bear to bullish, and then since then it's been just going up. I found it very hard to make money in shorting stock. and so my view, is like I prefer either to stay in cash or I see that is my job actually to find what are the stocks that would work well in a bearish market actually. So I would rather use that money on finding other longs than shorting. I don't know what's your feeling on shorting, but I found it really hard to be successful at it.
Yeah, I mean, like you say, of course, it's a little more complicated. Like you're starting the action, and basically, I guess to an extent, you're playing against the. I mean, the overall trend is kind of
Exactly.
up. There's a kind of upward bias, which is always going to be helping you on the long side.
Oh yeah.
So
No, exactly. I mean, the markets are going long in the very long time frame. Markets are going up, right? So you're totally right to say by shorting, by definition, you go against the underlying wave. So yeah. I mean, there's like 9,000 tickers in the US market only. So I'm sure you can find some that will work in the bearish condition. I'll give you an example. In 2022, during the bear market, actually, my like momentum peak worked quite well. I did like plus 13% over the year versus the market at minus 24. And it's just because the algo rightly picked the right sector or segment, let's say, of the market. So where was the momentum? So which was oil for the most first half of 2022, and then healthcare stock in the second half of the year. So you see, I think it's for me, from my style of investing, all about strength and momentum. I see my job is more trying to find where are those pockets of momentum in a given market condition.
Yeah, absolutely, and quite an effective strategy, I see, certainly at some points. Now, do you ever look at maybe the bigger picture at all? Because obviously you talked, for example, today about the Fed, obviously not doing that rate cut early on. Obviously, you track this to an extent. Is it something you implement at all in your trading, or something you give a little bit of thought? Or
yeah, so the way I approach these things is still, again, here is through momentum. And if you look at I have a weekly market recap where I cover like, earning data, market sentiment, economic report, and so on. And for me, I see through the momentum. Like, so if you think about the sentiment, like investor sentiment, I would look at, okay, how is the past 12 weeks sentiment evolving, and are we seeing a momentum towards more positive sentiment or more bearish, and so on. And same thing on the earning data, like our analysts raising their estimate, for example, are companies beating forecast more often than not, so I always try to look from a quantitative and let's say momentum approach. Now, does it impact directly my decision to buy or sell? I'll be transparent, no, because I mostly look at the price action to do that. But what it can impact is, for example, how much risk I'm willing to take. This clearly can play a role. So, for example, for me, one thing that I see is that I expect, let's say, is I think we'll see a bigger pullback at some point this year in the market. And I'm not an economist, but I feel that, for example, the expectation of the market in terms of how many interest rate cut we get this year and so on are not in the right place. So, and I think this is gonna drive a sell-off at some point. So while I will not take a decision now based on that, it's definitely something that I keep in mind as I maybe start taking profit on some of my position, or if I see momentum slowing down, I might take some preventive action to exit some of the weaker position in my portfolio, for example. That could be something I do, but ultimately I let data and price action drive the decision I make in terms of trading, because otherwise you get back to for me, you get back to like taking decision based on emotion and the noise you hear outside, right? Honestly, if you hear the noise right now, it would be hard to invest any money, honestly, if you hear, what people are talking around. I mean, in the media, between the wars, the Fed is not supportive, and the valuation are too high, and the stocks are at all-time high. I mean, it's kind of hard to be to be a bull when you hear all this. I mean, negativity, honestly.
Yeah, that's true, absolutely, and obviously something I've noted as a content creator as well. Obviously, the bad news tends to sell quite well.
Yeah, obviously, yeah. And this is why I say, like, I mean, it's very easy to get influenced by that, So for me, my job is knowing that I really need to build like some kind of system around me to prevent me to be influenced by the negativity. But at the same time, if the data, from the data I follow is telling me that I should sell, I will sell and turn bearish, one day from the other, and be fine with that, And what I see often in social media and around is, people are a bit stubborn in their view, like they say, I'm inventing, but like, I'm bullish on this, and they will stay bullish just because they said it in a sense, and they don't want to admit that things have changed,
Yeah.
I'm totally fine to say, like, for me right now, I'm quite more, if you read the newsletter, I'm quite bullish, let's say, from a market standpoint, and I've been like for the past 12 months, like since last year, I've been saying that the index will post a new all-time high, but I was bearish most of the 2022 year. I mean, I'm not a perma bull or perma bear. Let's say I'll just let the data guide my decision on this.
Right, of course. Like you say, you got to be able to adapt to the situation. I heard a quote recently, I'm probably misquoting it, but it was something like, bears sound intelligent, but bulls make money.
Exactly.
Which I thought was quite accurate.
Yeah.
So you did very briefly mention Bitcoin, so I wanted to get into that a little bit. What are your thoughts on cryptocurrency? Do you hold any for the long term? Is it something you ever think about trading?
Both, yes. Simple answer. So again, on this one, I'll be honest, I don't have like a big theory view on the role of Bitcoin or like strong opinion about is it going to save the system or not. I approach this like as an investment, and I look at the price action. So I'll be fully honest with that. So for me, I hold on long term Bitcoin, and again, it's purely based on technical analysis and price action. I mean, so and again, I talked about the perma bull. I'm not I'm not gonna hold Bitcoin forever just for because it's something that I that from a more like theory point of view I want to hold. So right now I have it because I like the long-term trend of Bitcoin. I've been also trading it short-term on my trading portfolio, let's say. And again, it's just based on the technical indicators. So I entered in October. I exited a bit after the ETF sell-off, and now I'm back in. Actually, as we seem that we try to find a second breath after the ETF shit show, let's say. So, but yeah, I hold no emotion on that. I just see that it's something that works well on using trend to make decision. So yeah.
Yeah, so holding some Bitcoin, but not necessarily because you think you're going to be using it at the shops in a few years.
Yeah, or maybe it might happen, but I'm not taking that. I'm not investing because I believe this will happen or not. You see what I mean? Yeah. Yeah.
Sorry, what about something like the crypto mining stocks? Because those definitely lend themselves to trading. Obviously, there's big moves in those. Have you ever played around with those?
Yeah, I played quite a few because I'm as we talked briefly before. I do a lot of option trading on my side, and at least from Europe, it was almost impossible to do that on Bitcoin, right? So I use Mara, for example, as a um, as a proxy of Bitcoin to trade option, basically. Now I don't know with the ETF how the dynamic will change. They will probably also at some point introduce option on the ETF. So I don't know if I will probably just go with directly with the Bitcoin than the Mara. So for me, I always saw it more as a proxy to Bitcoin versus like really having an interest in investing in the miners.
Yeah, absolutely. What about any altcoins at all, or
No, I'm not at this stage. I'm in a bit of Ethereum, ETH, but it's quite established now. On the altcoin, I'm recently I've been thinking into looking to reapply some of the strategy I'm doing on stocks to crypto. So, for example, maybe take a list of the 10 or 15 crypto and see to apply this kind of moving average or trend model and start trading it. So that's something that I could do in the future if I have a bit more capacity. What I've noticed, at least on Bitcoin and ETH, is that actually the moving average works quite well on that because they have quite clean trend usually. So that they are not the worst to trade, honestly. So the only watch out on crypto overall is the volatility. And for me, the other thing, so it's volatility, and the other thing is diversification. I tend to see that they kind of work together, honestly. Like if Bitcoin have a huge sell-off, most of the case it will also impact the other altcoins. So if you, for example, manage a crypto only portfolio, you get a lot of volatility and not a lot of diversification, in my opinion. Versus, for example, what I'm doing now on the stocks. So I have like 20 stocks, and it covers like tech, banks, oil, healthcare, consumer cyclical, and so on. So I found that I'm always kind of having, one of the group performing well and helping me from a diversification standpoint. You see what I mean?
Oh yeah, absolutely, definitely agree with diversification. Obviously, I'm a big crypto guy, but of course, you can't just put everything into crypto because you might wake up one day and have a heart attack, basically.
Yeah, exactly. But then, as a small allocation to a portfolio, like so on my trading portfolio, so I have like 25 tickers in total, including Bitcoin and ETH. And, like even putting 5% of your portfolio, as I said, in Bitcoin when the conditions are right, it still can deliver a good, good alpha for your portfolio. And it's definitively something that I think has value for me in the trading. Again, yes, it's more volatile, but you're just allocating 5 to 10% of your portfolio, so the risk is also minimized from that standpoint. But you can get big reward. Again, on that example, I did a 40% gain on Bitcoin over 3 months. So it's quite quite some impact on the portfolio performance.
Absolutely. And once the nukes start going off, you'll be able to buy some bullets or something, I guess.
Yeah. Exactly.
Well, you're obviously very knowledgeable. For anyone who's listening to this and kind of trying to think, oh yeah, I really want to start doing some more trading and stuff, where is a good place for someone to get started? What kind of resources would you recommend to someone?
It's always but in terms of book, you mean, or
any book or just videos? Anything really, anything.
Yeah, I think me, I did a lot of reflection first, honestly. Before, I followed a lot of people, content creator, other newsletter. I've been, subscribed to many services and Substack, Seeking Alpha, sorry, and so on. For me, the first thing to people, I would say, like, before jumping into, reading books or following people, is have some reflection on like what type of trader or investor you want to be, and how are you going to fit that into your lifestyle. So me, I have a full day job on the side, and also spending quite some time writing the newsletter, right? And managing the page. So I don't want to be stuck in front of my screen trading. And first, I don't have the time, and second, I really don't want to do that. So for me, as I was looking around, is like finding something that can fit my preference. So I want something that I have like a couple of trades to do per week, that I can do, that I don't need to be glued to my phone or my screen. That's one. The second one is I'm personally not the most passionate person, let's say. So and that's why I went through the momentum part, because the good part of the momentum is usually the result comes quite fast, or they don't come at all. You see what I mean? So like, for example, if I look at like a value investor, it takes like a very passionate type of mentality to be a value investor, because you're identifying stocks that are undervalued, and they might stay undervalued for years, and then when finally the market agrees with your thesis, you will make a lot of money. I mean, this doesn't fit with my personality. I would never have that passion.
Yeah, I think that's very sage advice. Like you say, kind of understand what you're trying to get from trading. And I agree with you. When I first started off, I had this idea of being a day trader, and eventually I thought, look, I don't want to spend like 8 hours a day staring at chart. No, I'd
exactly.
much rather be writing or doing something else.
No, exactly, and and there's so many of those elements that you need to study for yourself, and this no content creator or no market strategist can tell you for you. Only you know that. But like, what's your tolerance to risk? On paper, we always have more tolerance than in reality, honestly. So that's the lesson, and that those things will define a lot of how you trade. For example, the fact that I have like I manage like, let's say, 20 position in a trading portfolio. I mean, yeah, it's on one end it's a lot of position. On the other end, it's helped me from a volatility standpoint, because on a given day, the portfolio will move, let's say, from usually -1% on a given day, because 20 position, some are up, some are down.
Right, of course.
And this is more manageable based on my tolerance to risk. On this, if you have a higher tolerance, maybe you will do differently. But this is why, like, for me, it's like resources, people can find easily resources online. But for me, it's more do some reflection on like what would work for you, and what are your priority, and this kind of question. For me, I have I don't think my approach is the only one or the best, or and so on, but that's the one that works for me based on my style of trading, my priority in life, the time I can allocate to it, and so on.
Absolutely, like you said, fitting in the trading / investing into your broader life, because at the end of the day, people also have to balance. I mean, there's a lot more to life, right?
Oh yeah,
well, at least, right? Awesome. Well, I really appreciate you taking the time to talk with me today. Now, before we log off, please let everyone know where they can find you on the internet.
So I have the newsletter on Substack. So it's MyWeeklyStock on Substack, and then I'm also on Instagram, Twitter, same thing, MyWeeklyStock. And so I post a lot of analysis during the week, and then on the newsletter, it's usually 2 articles per week, 1 recap on the Saturday, and then on Monday the trading update.
Also, well, of course, the links will be on the description. Highly encourage everyone to go check that out. Once again, thanks for taking the time to talk with me today. It's really enjoyable, and hope we can do this again sometime.
Yeah, thanks for having me. And it was a real pleasure. And I hope it was helpful for your for the people listening. And thank you for suggesting this.
Absolutely. All right. Bye bye, everyone.
Bye bye. Thank you.